Is a 1% rate hike really going to happen? S&P down 4 days straight, and retail sales data in the spotlight, plus more. We're going to also take a look at trades that we took this week. But before we dive in and show you what's moving the markets, today is Friday, and if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. And on a typical morning, Rockwell's Trading's founder, Markus is usually with me, but he is traveling, going all over the place with his daughter, and then also heading over to Europe. So for this month, I'm going to be doing updates on Mondays and Fridays solo, and then he'll be back joining me in August. But with a lot of trading experience, we're sifting through mountains of news websites, newsletters, and reports, and then we take the most important news, go live right here to share with you what you need to know as you head into your trading day. Now, for those of you who watch every day, thank you for joining me, and we appreciate the channel follows and the video likes. If this is your first time here, though, I know it can be a little overwhelming, so we'll post a special video just for you in the description, which is a great place to get started to learn a little bit about what we do and how we approach the markets. Now, let's go ahead and dive right in here to the charts. Let me bring up the S&P here. Because we are on a 4-day slide. We are on a 4-day losing streak going into today's session. If we look at where we're at for the week, I mean, it's really been a bit of a wild ride here. Last week positive. This week so far, we're down 2.8%. It does look like we're finding a little bit of a range here. Looking at the last 4 weeks, you had this 2-week slide back here, and then a big up week in June, last week of June, pulling back, and then a rally last week, and now pulling back again. So it does look like we're starting to go a little sideways, but the S&P is down 2.8%. If we look at the Dow this week, the Dow down 2.3% heading into today's session. And then we have the NASDAQ down 3.3% as we head into the trading session. So it does look like we're going to wrap up the week negative, although we're off to a positive start here. Looking at futures markets, we'll circle back, take another look here. I do want to mention one thing that is interesting, and you could argue a positive. Last 2 days, we've opened lower, and there has been a bit of a buy the dip mentality. So here, if we look back at a 5-minute chart, this was yesterday's trading session. We opened lower, we continued to slide, found a bottom, and we reversed course. We didn't get positive for the day, or we didn't end up positive, finishing down 0.3%, but it was a lot worse. The S&P finishing at 37.90 at one point, trading down at 37.21. And it was a similar day on Wednesday as well, where we had this gap down. We saw continued selling, but then we made an attempt to fill the gap. And even though the day was negative, we came off session lows early and stayed above session lows. So we'll see if this is a sign of things to come or just temporary for the week. But even though we're down for the week, last couple of days, there was definitely some buying kicking in. It wasn't panic selling. And on Wednesday in particular, it did seem like we could get that panic selling. And the reason why is data. So this week we mentioned that what's moving the markets? Well, it's earnings kicking off, and it's data, particularly inflation data. So CPI data was released on Wednesday. We could take a look here at the economic calendar and PowerX Optimizer, and we see here that PPI data did increase more than expected. So inflation coming in hotter than expected. The forecast being up 1.1% from the previous month, coming in at 1.3%. We also had core CPI, which excludes energy and food, which can be more volatile. The expectation was an increase of 0.5%. This came in at 0.7%. This 0.7% increase was the fastest rise in over a year. So where traders were looking for CPI data, hopefully to show that we could be peaking and maybe turning the corner with the Fed rate hike that we had recently, and just energy prices coming down. Not the case, actually increasing, and CPI data annualized hit 9.1%, which is the fastest pace in 4 decades. So this is where on Wednesday, traders did not like that news. We gapped lower. We quickly saw a continued sell-off, and then things reversed. Traders kind of shaking it off and thinking maybe this isn't that bad. Same goes for PPI data yesterday, coming in hotter than expected, the forecast being 0.8%, but actually coming in at 1.1%. Now, core PPI data actually came in a tick lower than expected, so increasing 0.4% from the previous month versus the 0.5% expectation. And it was a similar situation. You gap down, you drift lower, and then traders are actually buying, which tells me that maybe there was a little bit of an overreaction. And we talked about this yesterday in our mastermind call. If we take a look at crude oil here, Markus mentioned in the call, crude oil. If you look at what crude oil is doing on a weekly chart here, you had this quick run up end of February when Russia invaded Ukraine, and there were a lot of uncertainties there, and we pulled back to $100 a barrel. Saw another peak here, but we've been turning the corner here, actually getting down to lows here that we hadn't seen since prior to Russia invading Ukraine. If we look at that weekly chart, though, we see that crude oil, down below 100 again. Could this last? Well, we'll see. But this energy drop, this decrease in energy prices and how it's affecting CPI data, that wasn't priced in because of when CPI data is reported. You also have this. So let's look at wheat. So wheat futures, looking at a weekly chart, we see that wheat futures down 11% this week, and once again getting to levels that we hadn't seen since before Russia invaded Ukraine. We could look at corn futures, similar situation here, down 3.9% this week. So commodities are pulling back, crude oil pulling back, and even copper HG pulling back. And you could say that it's because of a slowing economy, but jobs remain strong. The job market remains strong. And a lot of this is not being priced in yet to the inflation data. So it almost seems like traders said, whoa, this is, we're getting crazy numbers here. This is a huge concern. Inflation is not falling, but then it is a little bit lagging. And it could be that there's a much better number next month. At least from what we've seen this week, it's been a little bit of a let's buy after the overreaction rather than just panic selling and coming down to take out lows. We'll see where we end up today. Anyway, we are positive with futures heading into the open. But before we take a closer look there, let's talk about some other stocks that are actually moving the market here. And I want to bring up JP Morgan. JP Morgan yesterday kicking off earnings with big banks starting to report earnings, and JP Morgan saw a 28% drop in quarterly profit. The bank suspended its share buyback program and set aside $428 million to cover future loan losses if needed. The stock did finish lower yesterday, down 3.5%. A little bit of a positive start pre-market here, up over 1%. So negative earnings. Now, last month, JP Morgan CEO Jamie Dimon said investors should brace for an economic hurricane. And during JP Morgan's earnings call, it was said that there aren't any signs the U.S. economy is entering a recession. Dimon said that the economy continues to grow, and both the job market and consumer spending and their ability to spend remain healthy. But, quote, geopolitical tension, high inflation, waning consumer confidence, the uncertainty about how high rates have to go, and the never before seen quantitative tightening and their effects on global liquidity are very likely to have negative consequences on the global economy sometime down the road, he warned. So, in a nutshell, they're not seeing a recession at this point, but everything put together could have big negative consequences down the road. We'll see. As far as JP Morgan goes, hit yesterday, but up a little bit pre-market. Morgan Stanley also reported, and they had a miss. Not as bad, though. Here we see they did open lower. They drifted lower, but finished down just 0.4%, up 0.9% pre-market. Now, this morning, we had Wells Fargo reporting, WFC, the ticker. Wells Fargo is down 0.9% pre-market. They also reported worse than expected earnings, and so the they missed their earnings estimates by 6 cents, and revenue was also lower. Following in JP Morgan's footsteps, Wells Fargo set aside more money to prepare for bad loans. So on one hand, you have banks actually benefiting from a higher interest rate environment, but they are setting aside money to prepare for bad loans should that happen. So it's kind of a fine dance here between making more money on higher interest and people spending more money on credit cards, but then potentially having some defaults or people not paying. But they're preparing for that at this point. So that seems to be the theme. Now, Citigroup actually did better than expected here. Citigroup up 5% pre-market. So they beat earnings expectations with better profit and revenue, helped by rising rates. And speaking of rising rates, I want to go over here to the Fed probability tool, the Fed Watch tool here. And this has been really interesting. So circling back to the CPI data and PPI data. After CPI came in so hot, the probability of a 1% rate hike shot up, and it was almost 95% traders pricing in a 1% hike, which would be the absolute biggest in decades. And that's where it was at. I think it was in our mastermind call yesterday. We were talking about it, and it was up, I want to say 85%. Here, let me click on compare. So here, it doesn't. It shows where it ended up, not the intraday. But the rate hike probabilities were substantially leaning towards a 1% hike. It was kind of fun because Markus was taking bets with the group, him believing that it would not be 1% and that it would be 75 basis points. And now the probabilities have turned. So this was looking much different, where probabilities were basically betting, traders betting on a 1% hike at the Fed meeting in the end of July, on the 27th. Now it looks like it's switched back over, 60.8% probability of a 3/4 hike versus a 39% chance of a 1%. So we'll see what happens here, but definitely a change in tune from what we had yesterday when we were running through things and talking about probabilities of a Fed hike and what was to be expected. Let's look at just a few more movers here. And I want to look at Pinterest. Pinterest is up 14.5%. So for anybody holding this one, just a nasty stock all year long, down I think almost 75% from its highs, but getting a little love pre-market, trading above $20 a share. Now, this comes after the Wall Street Journal reported that activist investor Elliott Management has taken a 9% stake in the company. So traders are liking that, with the potential to have things shaken up a little bit, and potentially the stock benefiting from that activist investor. Let's Well, on a bit of a high note, Tilray. Yesterday, Tilray jumped almost 15%. This came after a report that Senate Democrats are ready to introduce a bill for federal decriminalization of marijuana. Down 1% pre-market, but having a real nice day yesterday. Solar stocks down today after news that West Virginia's senator, I can't remember his name, could be shooting down uh, some regulation on solar companies. I should have made notes on that. I'm just going to leave it at that because I want to talk before we wrap things up. I want to talk about the trades that we took this week. Um, Mental note. Make better notes. All right. See, Marcus is really good at that. Marcus does a great job at doing the notes, putting everything together. So, Marcus, if you're watching, see, we're a good team. Just because you're on the road having fun doing all this stuff and I'm doing this solo doesn't mean that I should only be doing it solo. Come August. Come August. All right. Let's look at a few trades that we put on. And actually, let me jump back to PowerX Optimizer here. So, PowerX Optimizer this week, here we have the watch list. I dipped my toes into MasterCard again. I've talked about MasterCard a few times over the last couple of weeks, last couple of months, I believe. I sold the 302.50 put, I think it was on Wednesday, and I was able to close it for 90% max profit yesterday. So a quick trade there. Uh, Pre-market trading around 329. So nice pop higher for MasterCard. This to me is just a nice looking wheel stock right now. Uh, you've looked at the overall market. You see stocks moving lower. People are asking, are you still trading the wheel? Absolutely. But we're being very, very selective. We're only trading stocks that we want to own, we feel comfortable own, that are profitable companies, that are trading in nice ranges and not just in a free fall. Right? Just because a stock was trading at $200 last year and is trading at $50 now doesn't mean it's a deal. Here, I really like this range, and this was a nice quick win. Yesterday, Marcus was active. He took ADP, automatic data processing. He sold the 200 strike. So he has the 200 strike for next Friday's expiration, and we see that there's some real nice support here. Also, Budweiser, Marcus has been active with Budweiser. He talks about his he talks about his German beers and Hefeweizen and really loving his German beers. But I think he's switching back over to the King of beers because he's been active trading Bud for a couple of months now. He took the 52 strike for next Friday's expiration, so that's one that he's in. Then we're also looking at one other FedEx. I guess I had it on my list there, but FedEx, good looking stock here. Looks like after some of the run up that we had and highs that have been made, we pulled back, started to see these real nice ranges, some nice support, and traded the 200 strike for next week as well. Down a little bit pre-market, but those are some new trades. So there have been opportunities. It started out a little bit slow this week, but yesterday, a lot of opportunity. Looking at the scanner, many stocks coming up. These were our favorite and trades that were put on. So looking ahead to next week, it actually is a very slow week for the economic calendar, but not for earnings. Not for earnings. So earnings will be in the spotlight again. And Monday, we have Bank of America, we have Goldman Sachs and Schwab reporting, just to name a few. Tuesday, the biggies, Netflix and Johnson & Johnson. And then Wednesday, we have Tesla. So just to name a couple of companies reporting, but earnings, we're getting into earnings season now. And that definitely is going to be the spotlight. Traders seeing if not only are companies meeting or exceeding expectations, but more importantly, future guidance. What do they expect the future to bring? That's going to be closely watched next week. And with the lights economic calendar, earnings will take center stage. So, with that said, futures are pointing to a positive start. We had retail sales coming out this morning at 8:30 a.m. Eastern time, and traders seem to have liked those numbers because we see that this is the reaction here in the E-mini S&P. Nice rally higher, pulling back or pausing at least right now, but up 1% as we approach the open. The mini Dow taking the lead up 1.2%, 1.1%, and the NASDAQ up 0.8% as we head into the open. So that's going to do it for today's stock market update. I hope you had a great week of trading. Hope you have a great weekend, and we'll see you on Monday. But until then, happy trading, everybody.